Welcome back to the show. Today we're diving into one of the most explosive stock stories of the past year, Micron. Emma, Micron's stock was absolutely on fire in 2025, right?
Yeah, on fire might actually be an understatement. Micron's share price jumped about 239% in 2025, which is insane when you compare it to the broader market.
Exactly. I mean, the S&P 500 was up around 16%, and Nasdaq gained about 20%. Those are solid years, but Micron just completely blew past that.
So the obvious question is, was this just a hot market lifting all boats? Or is there something very specific going on with Micron?
Right, and the short answer is AI. More specifically, AI memory chips, especially high bandwidth memory, or HBM.
HBM is really the key here. Micron is actually one of the leading suppliers of HBM chips used in AI processors from companies like NVIDIA and AMD. And as AI infrastructure keeps expanding, demand for these chips has just exploded.
And that demand translated directly into financial results. If you look at Micron's fiscal year 2025, revenue jumped from about $25 billion to over $37 billion year over year.
And earnings were even more dramatic. Adjusted EPS went from $1.30 in fiscal 2024 to $8.29 in 2025. That's not normal growth, that's a full business transformation.
What impressed me is that the momentum didn't slow down at all. In the first quarter of the new fiscal year, revenue was up over 56%, and earnings per share surged more than 160% year over year.
Which tells us this isn't just a one-quarter spike. And then Micron dropped another big headline. They said their HBM chips are completely sold out through 2026.
That's huge. When a semiconductor company tells you they're sold out for 2 years, it basically means demand is far exceeding supply.
And Micron even admitted they can only meet about 60% of AI memory demand right now. From an investor's perspective, that's actually bullish.
Definitely. Limited supply plus strong pricing power is kind of the perfect setup. And Micron also made a strategic move by stepping away from consumer chips to focus more on the enterprise and AI market.
Which makes sense. Enterprise customers care less about price and more about performance, and reliability margins are usually better there.
And interestingly, Micron's stock kept rallying into 2026. It's already up another 27%, while the broader market is basically flat.
That shows investors are still pricing in future growth. But I think another overlooked factor is manufacturing.
You're talking about the new fabs?
Exactly. Micron announced construction of a massive chip fabrication facility in New York, and then almost immediately followed up by purchasing another fab from PowerChip in Taiwan.
So they're not just talking about growth, they're actively expanding capacity to support it.
Which suggests management believes this AI-driven demand cycle is long-term, not just a short-term hype wave.
So, final question, do you think Micron is already too expensive after such a big run?
That's the big debate. Valuation is definitely higher, but if AI memory demand keeps growing the way we expect, Micron's current growth phase might still be in the early innings.
Yeah, it feels less like a short-term trade and more like a structural shift in the company's role within the AI ecosystem.
Agreed. Micron isn't just riding the AI trend, it's becoming a core supplier.
All right, that's it for today's episode. Thanks for listening, and we'll see you next time.